what I'm going to cover this morning is really should be aimed at the lenders. But what I'm going to do is I'm going to share it with you because not all lenders are created equal. Chris was in lending for years. Jeff did some lending, and you just find that not everybody does things the same way. Not everybody asks the same set of questions. So there's a lot of things that come into play that today, and the title of today's session is creativity. So some of it's really not all that creative, but you'd think it is because it's amazing how some lenders never bring it up. They'll ask some basic questions, or they'll send somebody to a website, they'll do an app, and then they run credit and they say, this is it, there's nothing else. Well, not really. There are things you can do that will be a little bit creative that might help put a deal together. And today, that is so necessary. We've heard Mike talk many, many times about how this market is so different than markets we've been in the past, and yet he comes back with the same saying, great agents thrive in all markets. Well, sometimes that requires doing things a little bit differently, and I call it creativity. So what are some real simple things that you can know that you don't have to get into the details. That's the lender supposed to do that. But not all lenders will do it. And you don't want to just wipe somebody out because the lender didn't ask enough questions or didn't make enough suggestions or didn't offer something. So one of the first ones, and I would suspect many of you have done this in the past, or a lender's done it for you with one of your buyers, is a non-occupant co-borrower. Where the borrower does not qualify. They're going to buy the house to live in. It's their primary residence, but they don't qualify. So in an instance such as that, how can we potentially get them into the property? Well, one of the first things that I usually ask people when I see that they may not qualify, one of the things I always ask them is, do you happen to have someone that might be able to get on the loan with you? Simple question. And I say might get on the loan with you. But that becomes an option. Now, one thing about non-occupant co-borrowers, they must be blood relative. Now, by blood relative, that blood relative can be kind of stretched. So, for example, if they're not married, but they've been partners and they live in the same place and they're going to buy the house together, they could potentially do that. If it's a cousin, it's considered blood relative. If it's an uncle, it's a blood relative. If it's a mother-in-law or a father-in-law, considered blood relative. So blood relative can be stretched a little bit, but that becomes one of the most, today more so than in the past, an excellent option. And you can do that on whether you're doing a not VA, but FHA or conventional lending. You can do it. And you don't have to have, used to have to be, if you're doing conventional, had to put 20% down, not anymore. You can do it with minimum down payments, works fine. So it becomes a great alternative. If somebody doesn't qualify, would there be a chance that maybe someone would be able to come on the loan with you? Casey.
I had a VA deal about 2 years ago where it was a boyfriend-girlfriend, and they had to get married first before they could both close on the property. Is that still the case?
Yeah, VA is very, very strict, unlike FHA and conventional. So VA, always check rules differently if it's VA, always. All right, so that's one. The next one, and I know a lot of you use this, but it amazes me how many times lenders don't bring it up, and that's gift funds. I don't understand. People don't realize that 100% of the funds that can go into a real estate transaction, not investment accounts, not if you're buying investment property. Investment loans, no such thing as gift funds. But that you can use gift funds up to 100%. Now the gift, there are restrictions on who can give the gift. blood relative needs to be the one giving the gift. And that, again, can be stretched. But gift funds, we are using gift funds from people today more so than maybe I've ever done it. And I think a lot of that has to do with the fact that home prices have gone up. People don't have the amount of savings that they'd like to have to be able to buy something. So they're using gift funds. But gift funds is a great tool as what I call part of the creativity that we want to put into the mix. The next one is asset seasoning. Now, Jeff, you mentioned you've got some numerous buyers and they are, but they're kind of sitting on the fence. One of the things that you've heard me say this over the last few years, I always encourage people, get the process started sooner rather than later. Even if you're not going to buy till next year, get the process started now. One of the reasons why is asset seasoning. Because sometimes I'll ask people, where are you going to get your money from for the down payment? And they'll say, well, I'll have it. Okay, I get it. You're going to have it. But where are you going to get it from? And sometimes you realize that they're going to get it, like one client that I'm working with is getting the money from South Africa. That's impossible, not impossible, but almost impossible to verify. So what my recommendation is let's get that money into your account today. Get it in there right now. Now, I've got to have 2 months bank statements that do not show that deposit. So we're going to be out 90 days before you can actually close on a home. But asset seasoning, let's get the money in the account today because the lender has to have 2 months where the large deposit does not show up on the bank statement. That can be done. Asset seasoning, a great tool, especially since people are sitting on the fence anyway. But if they wait 60 days and then they say, okay, fine, now I'm going to go out and find a house, and then the lender talks to them and they're going to get the money from South Africa or get it from the safe in their house or wherever it happens to be, now what do? All right, that becomes a trick. Next thing, I mentioned gift funds, but there is something else you can do with gift funds, but it takes the lender to use their head a little bit. And let me explain that. Let's say that your borrower has $10,000 in their safe at home. I know you think, who keeps $10,000 in their safe? Your client, Chris, you probably have several people that do that. There are people who keep large amounts of cash in their safe that they think they're going to use for the house. Well, they can't wait for asset seasoning. So what are they going to do? On an FHA loan, it gets a little tricky because we have to get one bank statement from the donor so we can see that they have the ability to give the money. But FHA's rule says, I, as the lender, cannot ask where the money came from in your account. So they want to close in the beginning of September. And I got to get a bank in order at the end of August, and I got to get their bank statement. Well, their bank statement from the donor, that is, the donor's got $10,000. The donor, but the buyer needs $15,000. The buyer has $5,000 sitting in their account, sitting in their safe at home. So what do? I can't use the money because it's in the safe. So they are going to give that money, not in the form of a check. They're going to give the $5,000 in cash to their mom, okay? Mom has $10,000 in the account. Now mom deposits the $5,000. Now mom gets me a bank statement where I see $15,000. I see a $5,000 deposit, but all I have to make sure of is that $5,000 is not coming from the builder or the real estate, or the seller or the real estate agent. That's it. As long as there's no relationship there, I can use all $15,000. Now, it's even simpler on a conventional loan. Because on a conventional loan, if the lender handles the gift funds properly, we don't even have to get a bank statement from the donor. So the donor might go out and borrow the money. The donor might go out and get cash from someplace, I don't really care where. But the donor has to not give the money to the borrower. I can't give the money to Chris. What I have to do is I've got to wire those funds from my account to the attorney. As long as I wire the money from my account to the attorney, I'm golden. I'll get proof that the money was there. I'll get the account number. I'll match that up. We're all set. No big deal. So when I can't do asset seasoning, I go back to using gift funds, but I'm going to use them in a specific way that FHA and conventional will allow me to do it so that we can get this deal put together. That takes a little creativity. So that's why I'm giving you these little tools, because, as I said before, not all lenders, Chris would probably agree, are created equal. You'd like to think we are, but we're not. Kind of like all real estate agents are not created equal. So, next, self-employed. Well, obviously self-employed makes it a little bit tricky sometimes because they don't have enough money on their tax returns to reflect that they can actually have enough money to support it. So what do we do there? Well, that's where you've heard it talked about. So we do a bank statement loan. And it's amazing how these bank statement loans are actually very aggressive and work pretty darn well. Now, you can get a bank statement loan for 12 months bank statements or 24 months. I'm doing one right now for 24-month bank statement loan. Listen to this, the interest rate on it is 7.99%. That's almost as good as just getting a normal loan. But again, 24 months of bank statements to support that we did an average of the 24 months. Most people are doing 12, but you can do 24. A little bit of creativity helped get the interest rate down. That same borrower asked, Greg, what if I only did 12 months bank statements? Just curious. The rate went from 7.99 to 9 3/8. So big difference. So again, a little bit of creativity can help the borrower get into a piece of property they might not otherwise qualify to get into. You folks have something that not every real estate agent has. It's called Easy Buy. And Easy Buy is a phenomenal tool. Casey and I are closing an Easy Buy loan today. Easy Buy bought the property on March 31st, and in their case, it wasn't the house to sell. He had to get a job. But he had a type of work that he would absolutely get a job, just that it's taken, in his case, 4 months to do so. He started work today. So we're going to close his loan this afternoon. But if it weren't for Easy Buy, this would not have happened. They would have been renting for all these months. Now they rented in the house that they're ultimately buying because they just rented it back from Easy Buy.
Saves them a few $1,000s
Oh.
having to move a couple times. It's not cheap. Easy Buy is not cheap.
Well, here's the thing, and I'll just share, Michelle and I have thought, what if we found a place we really wanted to be in? We want a little bit more acreage. What if we saw that? Well, the only way I could do that is if I did Easy Buy. And I told Michelle, I said, well, we could just do Easy Buy. She said, what is Easy Buy? I said, we let them buy the property. We find it, let them buy it. Then we go move in. I got to do that because, with all of our animals, because we've got a bunch of animals, I can't put the house on the market with all these animals. Now, I don't know that I'll ever move, but if I did, that's the way I'd have to do it. So people say, well, Casey said, well, it's expensive. Well, yes and no. Let me explain. Easy Buy, if you do the Easy Buy bridge, which is what I would have to do, or what the Invenitos did, in that instance, you pay 1.9%. That's the fee that goes to Easy Buy, 1.9% of the sales price. And on the surface, oh my gosh, so I'm paying, there's all this commission plus everything else, all my closing costs, blah, blah, blah. And you think, well, it's really not that bad. Because if you think about it, first of all, you eliminate doing 2 moves. You're only doing 1 move. You're going to move into the property that you're ultimately going to live in. So as opposed to having to put your things in storage and upset that apple cart and then move twice, once into storage, once out of storage, or like Jeff mentioned before all of you were in the room, he mentioned his client just did a VRBO. That sounds great. So you get into a VRBO, you might not have to get furniture, but all your furniture is now in storage. So you moved it into there, now you're going to move it one more time. And so when you break down the 1.9%, it's really not, you pay them 1.9%, but when you break it all down, at least what I did, my calculations, if it were for me, it's coming in just above 1%. That's just for the convenience? Are you kidding? 1%? That's nothing. Not when you look at the anxiety that exists with, okay, I'm going to go out and look at a home and I got to sell mine within 30 days or 40 days. In this market, may or may not happen. Now you don't have to deal with that. Just do the thing with Easy Buy. So creativity. We looked at non-occupant co-borrowers. We looked at gift funds. And then I talked about the gift funds can be done in a multiple of ways. The borrower might have to give the money to the parent or whoever the donor is so that they can then give it back to them because they can't do asset seasoning, which is the next one, asset seasoning. Bank statement loans are popular. You've got to take advantage of that if you've got self-employed borrowers. And then the last thing is y'all need to be talking, I don't want to say pushing, but talking about Easy Buy. It is a great alternative for people who are kind of not sure what's going to happen. Last thing that I will mention is that has nothing to do with this. It has to do with interest rates. Interest rates continue to just not want to move down. And you know, a lot of that has to do with just the fact that the market, the people who make the markets are just not willing to pull treasuries down yet. There's still some nervousness about what's going to happen with inflation. I shake my head, I'm thinking, I read all these economic indicators. I mean, if this, first of all, it doesn't look like this economy is going into any kind of a recession. That does not appear to be the case. It's going to be what they call a soft landing, all right? Consumer stuff is all looking great right now. All of that stuff is good. Wages are stabilizing, employment is stabilizing. There's a lot of good things going on in the market. That being the case, we should start seeing things come down if the market makers will just loosen up. Jay?
This is sort of a side note, but it's what everybody faces every day. Food is not included in the inflation because food prices are not coming down.
Well, there's two different CPIs. There's two different CPIs. There's the regular CPI, which food isn't, everything's in there. And then there's the core CPI. And core CPI does not include food and energy. All right. The core CPI is at 4.8, which dropped a half a point this last month, which is huge. And the other CPI, you know, the total CPI with everything in it is 3%. So it's, you know, let's face it, when it says 4.8% or 3%, that means things are going up at that pace. Okay, so it's not like things are going down, they're going up at that pace. But if they're going up at 2 or 3 or 4%, that's a whole lot better than what we were experiencing in July of last year when inflation was running at 9%.
But the crazy reality is the prices are 2 and 3% higher than that 9%.
Oh, it is. That's exactly right. Oh, no, they are. Oh, yeah. We can't get away from the fact that everything went up all those months that they went up so far. You're exactly right. Can't get away from that. No, it's, you know, I go look at buying a dozen eggs and I just have to, I think my wife and I are going to move just so we can have some acreage so I can have some chickens. You know, you still laugh. It's true. All right. Any questions? Thanks, everybody. Yes.
I have a question.
Yes.
Okay, I got a guy, wants to buy a house. He has a part-time job and he's got a business. Business has been around for about 15 months. He had to bring his mother-in-law in on it because she gets Social Security and she gets you know, benefits from her ex-husband and
Okay.
Social Security. So she got great income, great credit, but a ton of debt. So I need to use his business, which he doesn't have tax returns for yet. So I'm thinking bank statement program. If he's not in business for 2 years, will that still work?
No.
Okay. So it's gotta be 2
Bank
years.
statement loan does require 2 years in the business.
All right. I used
Yep.
it, I just didn't.
And part-time, by the way, part-time employment requires 2 years in that part-time job. Okay? So good question, Chris, yeah. So, you know, in that case, you know, you think about it, he's been in the business, he's had it for 15 months. He's gonna be buying probably in January. So he needs to get everything going right now so that he can get everything lined up.
Worked with him for 6 months already.
Yeah, he should have everything moving right now because it's gonna be around the corner. He's gonna be ready to go. He'll be ready to go. All right, thanks, everybody.